Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is January 29th, quickly wrapping up the first month of 2024. Today we are going to take a look at Gilead. This is out of the healthcare sector. This was a recommendation from Patrion Carter. I think that's Patrion. Apologies if I mispronounce your name. Can you look at Gilead Sciences because it dropped a lot too? This was actually posted on the ADM video, Archer Daniels Midland video that I did last week. This one must have dropped along with that one, but on that day, Archer Daniels Midland was the focus. Today, again, we're going to take a look at Gilead out of the healthcare sector. Let's jump right in. And if you want to help the channel grow, go ahead and hit that thumbs up down below if you find value in the content. Hit that subscribe button, hit that notification bell. The biggest one, drop a comment in the comment section below and watch the video to the end. All of those things really do help a small YouTube channel like me. Hit the subscribe button, join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors. Hopefully you are a dividend growth investor. That's why you are here. And hopefully you are on your own journey to financial freedom as well. And if you have not started your own journey to financial freedom and have started investing, drop a comment in the comment section down below. Let me know what you are afraid of, what you are waiting for. Would love to chat with you. This is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. It's also how I set up the Stock Pick of the Day video. So we are going to run through it just as it's listed here. We're going to take a look at the business, try to understand what they do, look at their growing free cash flow, see if it's growing over time. We want a growing dividend over time. Dividend payout ratio of 75% or less. Now that does not apply to REITs, BDCs, and companies like that that have to pay, like for example, REITs have to pay 90% or more of their free cash flow out in dividends. It's a requirement by law. BDCs typically, business development companies typically pay out more than 80% of their free cash flow to their investors because that's what they're doing. They're enticing you as an investor to pay in. So this applies really to companies, regular companies, not companies that are required by law to pay out more than you think they should. And you can use any number. You don't have to use 75% or less. Pick any number you like. Check valuation based on dividend yield theory. We'll take a look at that. Buy below current cost basis or within 15% of 52-week low. This is if I own a company, I want it under my current cost basis if possible. Or if I don't own a company and I'm looking to add it to my portfolio, I do a discounted cash flow analysis on the company, see what I'm willing to pay, and then I try to marry that with when it drops to within 15% of its 52-week low or lower. It could be 5%, 4%, could be right at its 52-week low. Very rarely do I ever buy anything right at its 52-week low or right at its lowest point. If you can do that, more power to you, and send me your secrets. We're going to look at return on invested capital, return on equity. We want 10% or better or equal to its industry average or greater. And earnings per share growth projected over the next 5 years, we want 5% or better or equal to or greater than its industry average. And for financial companies, I throw in price to book. 1 being fair value, under 1 being undervalued, over 1 being overvalued. Must meet 5 of 8 if it's not a financial company, or 6 of 9 to go on my watch list. Let's jump into the video. Back to Gilead. Check them out at www.gilead.com. That's www.gilead.com. That is their homepage where I pulled this information from. In the ancient world, there was a tree that was known for its healing powers, like the medicine resin it produced. The tree was called the Balm of Gilead. Centuries later, the need for healing continued to grow. We were founded in 1987, so that's when they started to bring new hope in the face of devastating diseases. For more than 35 years, we've been at the forefront of some of the world's greatest public health challenges. And I was a kid in 1987, but the big issue back then was AIDS, HIV. That was the huge issue, so I'm assuming they jumped in to do that. You can read the rest of this, but they are basically a pharmaceutical company, much like Johnson & Johnson or a Pfizer or a Merck. Companies like that, AbbVie might be one that you're familiar with. So these companies, very similar to Gilead. Let's continue on. And again, if you want to know more about them, www.gilead.com, GILEAD.com. That is their homepage. Now, the reason we were taking a look at them, down 0.57% on the day, closed out the day at $79.77. We are talking about Gilead Sciences, ticker, a little tongue-tied today, ticker GILD. And 52-week range as low as $72.87, as high as $87.87. So they are floating kind of midway between their 52-week low and 52-week high. Average volume 6.8 million. Today's was 6.5. You can see that sell-off throughout the day, even though it was just over half a percentage point. Market cap of $98.524 billion, a beta of 0.25. So this company is very low volatility, much less volatile than the overall market. Price to earning ratio sitting at $16.93 per share. Earnings per share sitting at $4.67 per share. Earnings date coming up sometime between January 31st and February 5th, so sometime later this week or the first part of next week. For dividend, $3 on the year. We'll see it as a quarterly payer. So divide by 4 or just give us a minute and we'll see that here later. And a nice starting dividend yield at 3.77%. Ex-dividend date, the last one was December 14th. Looks like they paid out on December 28th. So if you were to buy them now, you would be in line for their next dividend. Low payout under the 75% we look for anyway, 63.81%. And a one-year target estimate, at least according to Yahoo Finance, of $89.08. So they see it going up from here and setting a new all-time 52-week high. Now I like to get into statistics, look at dividend yield theory. To do that, you go down to dividends and splits. You look at their 5-year dividend yield average, 3.95%. You compare it to its current 3.77. Over here, forward dividend yield, 3.77. And since this is lower than their 5-year average, that speaks to overvaluation on this one. So this one right now at $79.07 is potentially overvalued according to the dividend yield theory. So if it was me, I would want more of a pullback on this one personally. Now let's take a look at the financials. We're going to look at free cash flow for our particular purposes here, but there's a lot of good information under financials. You can look at their balance sheet, their income statement, their debt to equity ratios, their assets over liabilities. Are their margins growing? Are their revenues growing? Like I said, for us, we're going to look at free cash flow. We want growing free cash flow over time. Typically, if a company has growing free cash flow, they have growing dividends. Free cash flow can be used to pay down debt. It can be used to reinvest back into the company, to make acquisitions, and in our case as dividend growth investors, to pay out a dividend. 2020, $7.5 billion. 2021, big jump up to $10.8 billion. 2022 looks like a drop down to $8.3 billion, but you can see here the repurchase of capital stocks, they increased that significantly. So you'd have to do the math, but it's pretty close to a wash right there. Either way, it's still over their 2020 numbers. And looks so far in 2023, as of the recording of this video, $7.8 billion, but they have repurchased even more of their shares. So overall, from 2020, I'm calling it growing free cash flow, repurchasing their own shares, which is nice. That makes you more of a shareholder. You own more of a percentage of the company, even if you don't invest more money into it when they repurchase shares. It's taking shares out of the market. That's a good thing. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You go ahead and pick any sources that you like. Just make sure that you are not just blindly following one source and that you're looking at 2, 3, if not 4 sources to make sure the information you are getting is accurate and up to date. Now, they have 13 stock analysts that have looked at this. They call it a consensus buy, though it is pretty close to a hold here. This would be a strong buy. This would be a sell. This would be a strong sell. And this would be a hold. So it is right close to that. And if you were to go to their site, stockanalysis.com, you could see how many out of these 13 analysts, if you clicked on the yellow, it would tell you how many said hold. If you clicked on the red, it would tell you how many said to sell, how many said to buy, or strong sell. They have a low estimate of $71, so they see potential for 10.21% further decline on this one. Average estimate of $89.69. If it was to hit their average, that would be a 13.43% increase from where it currently sits, and that's pretty much in line with what we saw on Yahoo Finance on the previous page. And if it happened to hit their high of $112, that would be a 41.65% increase in the stock price. All the while, you could collect that 3.77% dividend yield that we saw on the previous page. At least that's what it's paying now. Now, I like to get into statistics here, look at return on equity and return on invested capital to see how efficiently the company is investing back into itself. And I like 10% or better. Return on equity, ROE on this one sitting at 27.4%. Much higher than the 10% I'm looking for. And the same with return on invested capital, like 10% or better, sitting at 14.08%. Very nice numbers overall. We're going to take a look at EPS growth, earnings per share growth forecasted over the next 5 years, 16.17%. very fast growth on expected EPS over the next 5 years, and revenue expected to grow at 2.27%. Now here is the dividend history right here. They do, again, 64.38%, under the 75% I'm looking for. Dividend growth is slow on this one, so not a lot of dividend growth, 2.74%. Would like a little better dividend growth, but as companies get higher in dividend payout ratio, they tend to slow down the growth, right? They are a quarterly payer. They pay out in the March, June, September, December timeframes. And we went back to December 2020, they were paying 68 cents. March 2021, they jumped it up to 71 cents. March 2022, up to 73 cents. March 2023, up to 75 cents. And I would expect, if they are going to continue this dividend growth in March of 2024, you will see another increase on this one. Well, that is it for this one. That is Gilead. Thank you, Trivian Carter, for the recommendation. Hopefully, that is one that you, I don't know if you're investing in it. Let me know down in the comment section below. Is it one that you already hold in your portfolio? Is it one you're waiting on? Is it one you're avoiding? Maybe you just were looking for something in the healthcare sector. In my opinion, there are some other ones out there right now that are showing a little bit better value, but this is a good company. I do like the metrics overall. Nice growing free cash flow. Whenever I looked at them online, they've got a pipeline, and that's what you should be looking at for companies like this. Pfizer, Johnson & Johnson, any of them that make drugs, pharmaceutical drugs. You want to be looking at not just what they're selling now, but also what's coming up in the future. So what do they have in trials? What do they have coming up that's close to hitting market? Because what happens with a lot of these companies, or all these companies really, is they only have so many years where they can be the sole seller of this. They own the patent, and then after the patent expires, it opens them up to everyone. And a lot of the companies, where there are companies out there that do non-name drugs, right? The discounted drugs, so they will pick them up at that time. So they had a pretty good pipeline whenever I looked at them. That's what I'm getting at. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Help me grow this channel. Help me get the word out. Dividend growth investing. Join the community, the vested interest community. We are dividend growth investors. That is what we focus on here. Hopefully you are as well. That's probably why you stopped by the channel. Would love to have you on this journey to financial freedom. Let me know where you are on your journey as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company that you'd like me to cover in the Stock Pick of the Day series like Trivian did, go ahead and drop it in the comment section down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money, so never invest any amount of conclusion. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek advice, counsel, for financial advice.